Hello, welcome to my channel. The market has gone down a bit after I came back from my South Africa trip. Years to date, the Dow lost about almost 18%, Nasdaq lost about over 30%, and the S&P lost over 22%. Plus, the Fed just raised the interest rate by 0.75% last week. One common question that I receive from students and family and friends is, what do I think about the current market environment? I will share with you my thought and how I am anticipating them. If this is your first time visiting my channel, please subscribe and turn on notification bell. This channel is about investing in cash flow real estate, achieve your financial independence, and make an impact. My name is Korianne. I am a real estate investor since 2001. I achieved financial independence when I was 35 years old after consistently investing in cash flow properties over 8 years. How I have prepared for this coming recessions and in the past 2 recessions that I experienced. I share it in the video number 13 on April the 10th of this year. I posted the video link in the show note below so you can watch it if you have not seen it yet. I like to add 3 more things that all of us can do on top of the things that I share in the video number 13. Because the inflation rate is highest in 40 years and the interest rate is also increased higher since 2008. If you currently have some debts with high interest rate, you should consider pay them off now fast. I anticipate more rate hikes ahead in the coming months because the Fed wanted to reduce the inflation rate that we are having. Therefore, the rate hikes will make huge impact on your outstanding consumer debts. If you don't pay off the outstanding balance in the short period of time, then you should investigate some finance companies that offer a fixed rate consolidation loan to help you reduce your monthly payment. If you currently have credit cards charging an interest rate of 16%, that's high. You can find another credit card company that may offer loan consolidation at 7% or lower. You will save at least 9% on the interest rate payment. It's a huge saving. Number 2 I would do is increase your saving rate. We are now in the low personal saving rate of 4.4% because everything costs 8.6% more in the last few months. If the inflation rate keep going up at 8% or higher, then the personal saving rate can go negative. During the economic uncertainty, try to save more money by cutting down some discrepancy expenses like entertainment, eating out at the restaurants, and other expenses. Who knows? If the inflation rate does not come down fast enough after a few quarters, then you have saving to cover the necessary expenses without having to rely on credit cards to stay afloat. Also, if your living expenses depending on cash flow investment like stock and bonds fund, then you may experience a drop in value in your investment accounts now. I do hope that you have made personal investment plans to avoid a panic sell and have emergency funds that can help you to ride over this challenging market. I know it is hard to accept the reality, but preparing well to overcome all the financial challenges is not easy. But to avoid all the panic sells at the loss that could cost you time and resources. Number 3 things is get educated. Financial education is very important for all of us. Why? Whatever your investment vehicle is, continue learning and be effective in your investment. Build a good investment habit to reassess your investment regularly to reallocate investment to lower your overall risk. All the best investors have often advised others on how to mitigate risk. How to mitigate risk is to keep learning about your investment vehicle that you are using so you can make better and smarter investment decisions. As the market changes, your investment objectives often are very personal and unique to you and are likely different from all others. The more educated you are about your investment, the lower risk you are taking. And everyone should have an investment plan in place to avoid a panic sale. As for your real estate investment, if you decide to invest in real estate, run your numbers thoroughly and have a few exit strategies for each of your projects. Also, you should have 5 to 7 years investment plan for each project you acquire. Don't force yourself to invest in property just because you feel that you have missed the appreciation window in the last few years. When there is a recession, the unemployment rate will increase higher. Then the home price will come down to meet the income level. You would have a window of opportunity to invest in property at the right price in some markets that may have gone crazy high in the last few years due to the excess monthly supplies. If you have project that turn south, but the investment income still supports the investment loan, then be patient. The market will turn around. It's a matter of time. Impatient investor attract to money. Money attract to a patient investor. Let me know in the comment below how you prepare for the market downturn. Or do you think we are in the recessions already? Thank you so much for watching. Let's learn, invest, and make an impact. Ciao!